I know one of the main reasons why you're watching me today is to learn how to make money in forex trading, and that is the reason why I'm here today, to teach you the steps on how to make money in forex trading. On my previous video, one of the highest things that you can be able to do to make money in forex trading is if you are able to generate your own signals. On the previous videos which we just had on the channel, which is on the course which is going on, I taught you guys on how to use candlesticks to come up with your own signals in forex. But one thing which was lacking, which I did promise that I was going to bring it on today's video, is to combine candlestick patterns with support and resistance, because candlesticks pattern can't just go alone. You have to be able to combine candlestick patterns with support and resistance, or with a particular structure, to be able to come up with solid and firm signals in forex trading. So without taking much of your time, on today's video we're going to be talking about trading support and resistance like the pros. And you can't just trade support and resistance alone, you have to be able to combine it with candlestick patterns, which is what I already taught you guys on the past video. So without taking much of your time, let's get into the video. So on today's video, we're just going to be going straight to the point. We're going to talk about what is support and resistance. We're going to talk about how to plot support and resistance, because on this video I'm going to teach you why you should be able to consider support and resistance as a zone, not just as a line. So I'm going to teach you guys on how to plot support and resistance like a pro. I'm going to teach you guys on what is a sideways market, because one thing I see in forex, or one thing I see on the internet or on YouTube or everywhere, is everybody just teaching you something about support and resistance. They'll just teach you something like this. They say, okay, support and resistance, failing to understand that we also have trending market. We also have market that trend up and down, and 90, or let me just say 70% of accurate signals come from trading market. So I'm going to teach you about sideways support and resistance. I'll also teach you about trending market support and resistance. How can you come up with solid support and resistance or signals on trending market? Then another thing, we'll also talk about mastering change of price structure, because price structure, the support you have today might become a resistance tomorrow, and a resistance you have tomorrow might become a support. So how can you quickly spot those changes, and how can you be able to modify your trading setup to still trade those changes? So that is what we'll still cover on today's video. Then major and minor support and resistance level, because we do have what we call major support and resistance level, and we have what we call minor support and resistance level. And if you don't understand the difference between major and minor support and resistance level, you won't be able to manage your trade. You might execute a trade. In forex trading, we have two most important things, which is trade execution and trade management. If you don't have an idea about major and minor support and resistance level, you might be able to execute the trade, but you won't be able to manage the trade accurately. And knowing how to manage the trade is what will be able to what will enable you to be able to go out of the trade with a profit. So we'll talk about major and minor support and resistance level. Then we'll also talk about a reversal or a change in the support and resistance level. And then we'll also do a live demonstration on a chart. All right, so let's see what we have here. You can see on the screen we say what is a support and resistance. And most of the time I always like to call it a support and resistance zone, because it is always very imperative and very important when you are able to trade or to treat support and resistance like a zone instead of just treating it like a line. So the first thing we have here, and if you can see on the screen, we just have this chart. You can see here we have the support line and the resistance line. This is very basic. This is very basic, and this is for a sideways market. You see, for a market which is like this, and you have the support and resistance, you see the chart will look something like this. So this chart is very, very basic. You won't see something typical like this in forex. In forex trading, you need to be able to have the experience now to come up to be able to extrapolate accurate support and resistance level. So this is just something very basic. All right, so let's see what we have here. They say support and resistance level are price level in the market where currency prices are expected to have a turn or a breakout if there's high liquidity in the market. So what do I mean? So support and resistance level are levels in the market where there's a high probability Remember, trading is a game of probability. There is nothing that is 100% for certain, because you don't know what will happen in the United States. You don't know what will happen in the UK. You don't know what will happen in Canada. And anytime an economy is affected, the currency of that particular country too is affected. So you might say something for certain, but you don't know. Even just a disaster or a natural disaster can still affect that particular currency. So nothing is for certain. So because of that, we talk in terms of probability. So a support and resistance level is a level where there's high, remember, there's high probability, all right, high probability. Those are levels where there's a high probability that the market might have a turn, or if there's high liquidity in the market might break that particular level. That is why if you see here, we have support and resistance. The market came here, had a turn here, that is why I say a turn or a reversal. And when the market got here, there was a turn or a reversal. And if there's high liquidity in the market, then this chart can either the market or the price can break the support or the resistance level. All right, so that is just what I'm explaining on that particular point. Then still on support and resistance, they say a support will normally occur when falling prices stop, change direction and begin to rise again, while a resistance will occur when rising prices stop, change direction and begin to fall. What am I saying here? For example, this is how do you know when a support, how do you know a particular support level, and how do you know a particular resistance level? On this particular point, I'm explaining that a support will normally occur when prices stop falling, change in the direction and begin to rise again. So the prices were falling, they got to this particular level, they stop falling, then they change the direction and begin to rise again. That's why you have this particular term. Why a particular resistance is where the price was rising, got to that particular resistance, change the direction and begin to fall again. So that is how a support is formed, and that is how a resistance is formed. And the main dynamic behind support and resistance, what causes support and resistance, is demand and supply in the market, is buying and selling pressure in the market, is when the bulls and the bears have imbalance in the market, and it will always be like that. There will always be a time where supply is more than demand, and there will always be a time where demand is more than supply. There will always be a time where buying pressure is more than selling pressure, and there will always be a time where selling pressure is more than the buying pressure. So because of that imbalance, that is why we are here today. We make money from that imbalance. We make money from those fluctuations in the market. That is why you are able to see support and resistance level. And traders like you and me, we use this to be able to come up with signals, or to be able to come up with patterns that can enable us to either buy or sell a particular currency pair. And then another thing about the support, they say a support is normally viewed as the floor. All right, so if I'm standing here, let me just read the support is normally viewed as a floor, which prevent the prices from continuing to fall, while the resistance is viewed as the ceiling that prevents the prices from continuing to rise. Very, very simple. If I'm explaining, or if I'm bringing this particular lesson to you, I'm standing on the floor, right? I'm standing on the floor, and above my head you have the ceiling. So if I'm standing on the floor, what is supporting me? This is the best and the basic way you can use to understand support and resistance. If I'm standing on the floor, right, what is supporting me? The floor is supporting me. So the support is always below. The support is always the below line that prevents the prices from continuing to fall. All right, so the support is normally and always below. And if I'm standing here, if I have to just fly and go to space, what will prevent me from going out of this house? The ceiling. So the ceiling is that resistance. What will prevent me is that resistance. What will resist me from going? So the resistance is always above and the support is always below. As simple as that. When you use these simple dynamics, you'll be able to understand support and resistance. And no matter any other chart you see, that idea in your mind of the floor and the ceiling will always enable you to draw any support and resistance in any asset or in any currency pair. All right. So with that being said, they say, you should think of support and resistance more as zone. All right, you should think of support and resistance more as zones rather than discrete lines to filter and prevent false breakout. We're going to be able to explain that in details videos, because that's why you see this line is very, very thick. I would have just drawn one small line here and say that is my support and that is my resistance. But you see this one is thick because in Forex trading, it is always advisable to consider support and resistance. Please make sure you take down these things, because this is what will help you a lot and will also prevent you from blowing a lot of accounts. Because with this, when you're able to know about support and resistance zones, you'll be able to filter out a lot of what we call false breakout. All right. So that's why on this point, I'm explaining that you should treat support and resistance as a zone, not as a line. Because when you're able to treat support and resistance as a zone, even if the price comes here, even if this particular touch, the candle came and just ended somewhere here, another candle came and ended here, then another candle came and even went right down here, another one came and ended here, you won't just say, okay, since this one came and break through this particular point, I'm going to say because it has broken through that line. No, you'll be able to understand that since you are treating support and resistance as a zone, the price has the price has a capacity to fluctuate here. So the price can still fluctuate on the whole of this area, and it will still be respecting the support. It will still be respecting the support zone. Even if the price has to go down here, it will still be respecting the support zone. All right. So we'll come to more. I'll be able to explain more about support and resistance zones in our subsequent videos. So with that being said, let's see what they say. How to plot support and resistance level. Okay, and when it comes to how to plot support and resistance level, remember I explained to you guys that 90% of the times, or 90% of the times, when I go on YouTube, when I check on Google, when I check on the internet, or most of the time, even when I was taught, they told me most of the times you have to just check your support and resistance. Support and resistance, they always, or 90% of the time when you see support and resistance chart, they always look like this. All right, you always just see something. You always just see something flat. Somebody will be explaining, this is my support and this is my resistance. You always see something like this in Forex. All right, but in most cases, that is not the case. Let me not be too discreet. 60% of the signals, or 70% of more accurate and precise signals that you have in Forex will come from sideways market. That means from sideways market, that is support is instead here and resistance is instead here, or support is instead here and resistance is instead here. So you see, so 90% or 70% of accurate signals that have actually traded in Forex come from trending market, not from sideways market. All right, because if you see a market going like this, at least that market is trending. But if you see the market going like this, then the market is in a sideways trend, in a sideways or in a consolidation. All right. So anytime you see people just drawing support and resistance, they just draw something like this. They just do like this. This is a typical example. This is a typical example of a sideways market, of a market that is sideways, or a consolidation market. This is the typical example that we have here. Because on this one, you can see the prices were just bouncing from here to here to here to here, which is a typical support and resistance. You could be trading here, trading here, trading here, trading here. This is what we call support and resistance in a sideways market. Support and resistance in a sideways market. So when it comes to support and resistance, plotting support and resistance, or trading support and resistance, you have to be able to differentiate it. Are you trading it on a sideways market, or are you trading it on a trending market? I'm going to show you all the differences. All right. So let's start with sideways. Let's start with sideways market. So trading support and resistance on the side, they say determine price point. What is support and resistance? How to plot your support and resistance level. What you have to do is you have to determine price points where the market had 2 or more turns or touches. All right, as easy as that. See something we have here. So anytime you see a particular point or a particular level where the market or the prices had 2 or more touches or turns, it means that is a particular support or a resistance level. For example, here, this was the first touch. We had our first touch here where the market was able to touch this particular zone, this particular support zone. We had another touch here. We had another touch, number 2 here. The market was able to touch this particular place. We had number 3 here. The market was able to touch this particular place. So So long as we had 1, 2, we would have known that, okay, this is a potential support level. All right, so long as we had the first touch and the second touch, we would have known that this is a potential support level. All right, and going to a resistance, here we had our first touch on the resistance. Number 2, the second touch was here. So long as we see the second touch, we already know that, okay, this is a potential resistance level. And if the price is here, and it's going up, we already know that, okay, this is our resistance level. And once the market get here, we'll be looking for a sell signal. All right, once the market gets to this particular resistance level, we'll be looking for a sell signal. And what happens? See what happened here. We had this full engulfing candle. We would have sold somewhere here, stop loss here, and take profit here. As simple as that. That is how you draw support and resistance in Forex. And the same thing happened here. Since we already knew that this was our support line, we already knew this was already the first touch, the second touch, and the third touch. So this was already our support line. So once the market was here and it was coming down, we already know that, okay, there's a high probability. Remember, you have to be able to speak like a Forex trader because you are working in probabilities. So once the market was here and it's coming down, we already know that there's a high probability. There's a high probability that the market might change direction at this particular point. So what happened? The market got here. This was a what? This was a hanging man. So we bought here. We bought somewhere here. We put our stop loss here. Our take profit here. We are out. So you see, you bought at the support, sell at the resistance. Bought at the support, sell at the resistance. So this is a typical example for a sideways market, for a sideways or a consolidating market. All right. So now let me show you an example. Let's go to the next point. The next one, they say for you to consider a support and resistance level to be valid, for you to be able to consider a support and resistance level to be valid, there must be at least 2 touches or price turns. All right, here we had 1, 2, so there must be at least 2 touches. Here 1, 2, then we know that, okay, this is a potential support level. Then here 1, 2, this is a potential resistance level, and you can see the price keep respecting that particular level, keep respecting that particular level. And then for sniper support and resistance, always step down to the line chart to confirm the same resistance and support levels are respected. What is the explanation of this one? So if you want to now, remember one thing I promised you guys on the last video is to show you how to come out with sniper support and resistance level. That means support and resistance level that will always respect your price. Support and resistance level that as soon as you buy at the support, you see the price, you are already in profit. As soon as you sell at a particular resistance, you are already in profit. So how do you come out with those sniper support and resistance level? What you do is on your MT5, when you already plot your support and resistance manually or using the candlestick chart, what you do is, that's why I see here they say candlestick chart. This one is a candlestick chart. All right, this is a candlestick chart. So once you already plot this same chart, once you already plot this on your MT5 on the candlestick chart, and you know, okay, these are my potential support and resistance level, what you do is just go on your MT5 and click on where you have the line chart. Because remember, you have to be able to understand this course is a continual course. On our previous courses, I already explained to you guys the evolution of price chart, the evolution of Forex chart, and a candlestick chart is an evolution of a price chart. So when in Forex, it started with the line chart. They were just trading with the line chart. The line chart was just something like this, where they were just plotting price against, or they were just using the chart to predict or to plot the price against time for a particular period of time. So with this one, they just plotted, it was just a line chart, all right? But now, since they were evolving, they couldn't know the open, the close, the high, and the low of that particular period. So they come up with what they call the bar chart. After the bar chart, the modification of a bar chart is what they call the candlestick chart, which you see everybody using today. But now, for us to be able to have sniper support and resistance level, we have to go back in time. All right, we have to go back in time to the line chart to see if the line chart will respect those same levels. As simple as that. As simple as that. Please you'll be able to do your back testing using that same technique, and you'll be able to tell me the hundred of sniper support and resistance that you see. As simple as that. So as soon as you already have this same support and resistance level using the candlestick chart, let me show you what will happen. You can see here we have this same chart, right? We have this same chart, which is I think this one is Euro card. We have this one on the candlestick chart. See what happened. Now this is the same chart. This is the same chart now with a line chart. This is a line chart because I already explained it using a candlestick chart. This is a line chart, and if you have to check here, can you show me the support and resistance on the line chart? It is very, very visible. This was a touch. You can see this was a touch here. This was a touch. This was a touch here. This was a touch here. This was a touch. This was a touch. So you can see the same support and resistance level are respected on a line chart, because this is a typical line chart. And how do you do this? Let's go on a live MT5 chart so that I'll be able to show you how you can be able to do this. Because the same chart that we just saw, let me go back, and this same chart is this same chart. You see the same chart with the candlestick pattern. With the candlestick pattern, it respected the same level. This was our support and resistance level. It respected the same level, respected here, and respected here. Now, if we then step down to the line chart, the line chart is for the same currency pair, the same time frame, the same thing. Now you have something like this. And if you can see our line chart, this is our line chart from here. This is our line chart from here to here, to here, to here, respecting the same thing, all right? So now, how do you do this? Let me go on MT5 and I'll show you how you can be able to do this, all right? So now, let me just see. Let's go back to MT5. Okay. Good. So let's go back to MT5 so that I'll be able to show you. Okay, let's close this one. Good. So you see here we are on MT5, right? This is MT5. Let's just open this one. I think this one is the same one we're using to explain. Yes. So let's push this one down. Good. This is the same chart we're using to explain. This is the same one. That is the current market price. This is the same chart we're using to explain. And on this same chart, let me remove it from auto scroll. Let me remove it. I don't want grid. Let's remove it from grid. Let's also remove it from auto scroll. Good. So on this same chart, you can see the same chart that I was using to explain. This is the same thing we have here. This is the same support and resistance level. And here you can see we had our support. We had our support here. Here we'll have our support. This is our support here. And here we have our resistance, all right? We have our resistance here. The same levels are respected. The same levels are respected on the, this is a candlestick chart. Now, if you want to be able to see if the same levels should be respected on the line chart, what you do is you just go up here. Let me show you. You go up here, you'll be able to see this is the line chart. All right. Let me be able to zoom this in a little bit so that you can see. Because those are the same levels. Good. So let me zoom in a little bit. So you can see, you just go up here on the line chart. This is a line chart. You click on it. As simple as that. When you just go up here, click on the line chart. And if it is a solid, if it is a valid support and resistance level, you'll be able to see. Because this one, you can see it is a valid support and resistance level because it respected the same levels. You can see the same levels. Anyone which is not a valid support and resistance level, when you go up and you go on the line chart, when you click on the line chart, the levels won't be respected again. That means the levels should be different. That's when you know, okay, this is not a valid support and resistance level. All right. So after doing that, you can now, you just go back again. You click on candlestick. This is candlestick. You just click on candlestick. Let me go back to candlestick. Okay. Good. You just go back and you click. After this, when you just go back now, you click on candlesticks and your chart will be able to go back to a candlestick chart. So with that being said, let's go to the next point, which is how to plot support and resistance in a trending market. because anything or most of the times what you see on YouTube or what you see on the internet or what your mentor tells you, they just show you support and resistance in a sideways. They just show you support and resistance in a sideways market. But 70% of the time, the market is trending. 70% of the time, the market is either going up or going down. So the market trends 70% of the times. So what they fail to show you most of the times is what they call trending support and resistance. Support and resistance on a trending market, all right? Which is the same thing we have here. You can see this is a typical example, a typical chart of Euro Canadian dollar. And here, instead of having our support and resistance as typical as what they always say, support and resistance, we instead have it in a trending market. All right, because here you can see this is instead our support. This is our support line, and this is our resistance line. Or this is our support zone. This is our support zone, and this is our resistance zone. All right, and you can see how nicely formed it is. How you can see how the market respected this line time without number. And there are criteria. There are criteria you use in trading. There are criteria you use in trading support and resistance on the trending market. You need to be able to. You need to be very careful. Anytime you see support and resistance on a trending market, criteria and strategies that you use to trade support and resistance on the trending market are totally different from criteria that you use to trade support and resistance on a sideways market. That is why they say the same criteria for a sideways market applies, but the only difference in a trending market, the only difference here is that this is a trending market, because instead of seeing the support and resistance like this, the market was actually going up. That is why you instead have the support here and the resistance here, because it is a trending market. If it was the market was going down, then we'll have our support here and our resistance here, and you see the chart will be bouncing and going down. That is a trending market. A trending market can either be an uptrend or a downtrend, can either be a bullish trend or a bearish trend. So, and 70% of signals come from bearish and bullish trend, not only from sideways markets as opposed to the last chart I showed you, or as opposed to most charts you see on the internet. The highest signals will come from trending market, from trending trend. All right. So with that being said, let's see what they say. They say trading support and resistance on trending market. Don't try to catch a falling knife. Let me explain what this means. If it comes to trading support and resistance on the foreign market, here you can see very clearly that the market was going down because it was forming what they call higher lows, higher height, higher lows, higher height, higher lows. All right. Don't worry when it comes to higher lows, higher heights, higher lows, higher heights, higher lows. Don't worry, higher heights. So don't worry about this. We are still coming. There's still a dedicated video which I'm bringing, which will teach you on how to spot trends, accurately. Because sometimes your eye might actually be lying. You might just see something I think is going up when actually the market is in a consolidation, or it might even be going down. All right. So now you can see, but this one typically you can see was forming higher lows, higher height, higher lows, higher height, and it was in a typically uptrend. All right. So now what I'm explaining is the same strategies that you used to trade here will be totally different from the same strategies you used to trade if the market was just in a consolidation, not forming any high heights or any higher lows. All right. And here the explanation is, if it is in an uptrend, please write this down. This is very, very important. If it is an uptrend and you are trading support and resistance for that uptrend, you should only be looking for buy trade, or you should only be looking for buy signals. All right, let me explain what I mean. This is an uptrend, and it is very, very clear. It is already very, very clear that in the bigger picture, buyers are in control. It is already very, very clear that in the bigger picture, demand outweighs supply, because anytime demand outweighs supply, or demand is more than supply, the market will obviously go up. It is already clear on the chart that demand outweighs supply. It is already very clear on the chart that the buying pressure here is more than the selling pressure. Anytime the buying pressure is more than the selling price, the only signals you should be looking should be buying signals. All right. And more to that, if you try to buy when the market is instead going up, you will be trying to they say to catch a falling knife. All right, to catch it, that means the market is going up, the knife is going down, and you're trying to catch a falling knife. It's the same thing. That is why the word trade with the trend. All right, you've heard of this. trade with the trend. That's where the term trade with the trend comes in place. If it is an uptrend, always be looking for a buy signal. For example, let's start here. This was the beginning of the trend, all right? And we already knew that this was our support level. The market got up here, even though this was our resistance level, and would have sold somewhere here. But now, even if we sell here and we are looking for risk to reward, the risk to reward that we have up here will be typically very, very small as opposed to the risk to reward we have down here. Let me show you what I'm saying. If we have to sell this market somewhere around here, right? Our take profit, our stop loss will be somewhere here, and our take profit will be somewhere here, since this is the support line. And from year to year, this is a risk to reward of about 1:1. All right, that is a risk to reward of about. So you are risking $1. You are risking from year to year to have from year. So you're risking $1 to have $1. If you are trying to trade opposite the trend. But now, come with me. Let me show you if you want to trade with the trend. Now you come here. You know you're trading very well. You know what you are doing. You know that, okay, if the market is going up, if the trend is an uptrend, I should always be looking for buy signals. Even if the market is here, you can go to another pair. There are hundreds and hundreds of pairs. Go to another pair. You wait for the market to pull back here. As soon as the market pull back here, you can see there was a buy signal. So even if you have to buy here, you buy here, you put your stop loss here, and the take profit should be on the next resistance. You can see, and you can see this resistance is not just as straight as opposed to the sideways market. The resistance line is in an upward manner. And since our next target is supposed to be on the next resistance line, where will be our next target? Our next target, this is the next resistance line. And the market, since we are expecting the market to go, our next target will be somewhere around here. So our take profit will so you are risking this to go here. So your risk to reward here is about 1:4. Can you see? So you are risking here $1 to have $4, or you are risking $100 to have $400. And you can see what happened. The market went straight after that to hit your take profit, and you are already out of the trade. All right. So that is it. And I'll be coming in a video that I'll do dedicating it on how to trade support and resistance. I'll still show you very clearly how to place your target, because you can see anytime I buy, I put my stop loss and my take profit on the next resistance. That's how you do it. If you are trading support and resistance, if you buy at the support, your take profit is at the next resistance. Or if you sell at the resistance, your take profit is at the next support, and your stop loss is below the signal you just got, and your risk to reward. Always take trades that you have at least a risk to reward of at least 1:2. You must have a risk to reward of at least 1:2, so that even if you have an accuracy of 40%, that means even out of 100 trades, you have just 40 trades that are right, you still come out as a profitable trader. All right, because your risk to reward is at least 1:2. That means for any time you risk $1, it should be in such a way that if the trade goes your way, you make at least $2. So your risk to reward should be at least 1:2. There are situations where I used to have a risk to reward of at least 1:6. So for every $1 that I risk, if it goes my way, I have $6. So even if I have an accuracy of 30%, so even if out of 100 trades, I have just 30 trades which are correct, I still come out as a profitable trader. Why? Because the secret is risk to reward. My risk to reward is very high in such a way that the one winner that I have will be able to bulldoze, will be able to cover all the small losers. So that is that about a trending market. And the same thing to say for sniper support and resistance, always step down to the line chart. The same thing I explained for a sideways market applies for a trending market. So for a trending market, you do the same. Always go down to the line chart to see if the lines you are calling support and resistance lines, or to see if the zones you are calling support and resistance zones are actually respected on the line chart. Just like I explained, if the same zones are not respected on the line chart, then those are not effective support and resistance level. If they are not respected on the line chart, then those are not sniper support and resistance level. All right. And see, in this case, this is the same chart, Euro card candlestick chart. All right. You can see under here, Euro card candlestick chart. Let me show you the same chart on the line chart for us to be able to verify, for us to be able to validate it, if this this is a good support and resistance zone or not. So see this. You can see this is the same chart. This is the chart on the candlestick chart, and this is the same chart on the line chart. And if you can see on the line chart, the same thing irrespective, the same touches we had, the same thing on the line chart, which is what? Confirming that this is a sniper. This is a sniper support and resistance. So any trade that any trade, most of the time, 80% of the time, trades that you take on support and resistance force, which have sniper levels like this, immediately you get into the trade, if it is a positive trade, you are already in profit. You are already in the money. They call it in the money. All right? Because you are able to come out with sniper support and resistance. You are able to come out with accurate support and resistance. So always step down. I've already shown you guys how to step down on a line chart to confirm. On your MT5, above the screen, you just see where they say line chart. Click on the line chart to confirm. After you've already confirmed, after you've already extrapolated the lines using a candlestick, only do that when you've already extrapolated the lines using a candlestick. Step down now to a line chart to confirm if it has the same touches. If it has the same touches on the line chart, then that means it is a good support and resistance level. Then that means it's a sniper support and resistance level. All right. So that is what I wanted to explain on that one. And then let's talk about mastering change of price, mastering the change of price structure. This is very, very important. Very, very important. Because here, this is what I've been trying to explain. Because in Forex trading, most of the time, what people show you, they show you all of this. They show you only a sideways market where you just see support and resistance bouncing like this. 90% of the time, tell me if 90% of that is what people show you. But let me tell you, 80% of the time, the signals that work very well in Forex trading, the signals that work very well are the ones that come out in trending market. If the market is going down or going up, those are the signals that are very, very accurate and very, very predictable and very, very profitable. All right. So now we have a combination of both markets. We have a combination of this one is a sideways. This one is a sideways market. And then this one is a what? It's a trending. This one is a trending. Let me put it here. This one is a trending market. All right. So this one is a trending market which is going down, and this one is a sideways market. So we have a combination. Now on this slide, remember we're talking about mastering change of price structure. The first structure we had here was a sideways or a consolidation market. All right. But now at a particular point in time, sellers came in place, or sellers, the selling pressure was more than the buying pressure. Since the selling pressure was more than the buying pressure, the price dropped. The price dropped and the volatility was so high and the support level got broken. Since the support level got broken, the market changed. The market changed from a sideways structure or from a sideways support and resistance movement to what they call a trending market. So what I'm explaining here is that the same strategies, the same system, the same format, the same strategies that you were using to trade this sideways market are going to be different from the strategies you'll be using to trade the trending market. Because, for example, since this one is a sideways market, I already just know that if the market comes here, I'll buy. If the market comes to my support, I'll buy and put my take profit at the next resistance. If the market comes to the resistance, I will sell and put my take profit at the next support. When it comes here, I'll buy. When it comes here, I will sell. But since it was already broken here, from my last explanation, I mentioned very, very clearly that anytime you see a particular trending market, if it is a bullish market or if it is an upward trend, you should only be looking for buy signals. All right, that's why they say the trend is your friend, and that is very true in Forex. Always trade with the trend. Always follow where the money is, because following the trend is like following the money. Go where the money is. So I explained very well. If the trend is going up, then only look for trades which are in a bullish trend. And if the trend is going down, if the trend is bearish, only look for signals that are supporting the bearish trend. Here we have our trend. We have our trend is a typical downtrend. And since we have a downtrend, the only signals we should be looking for here are sell signals. So what we would have done is, even see what happened. Even what happened here is still another structure which we used to call break and retest, because you can see the structure got broken here, retest, then went down. Which is, I'm coming to this on our next video. I will explain detailedly how to trade bounce. There's another system we call bounce, because what I was just talking about here is bounce, where anytime your price bounce on support and resistance, you either buy or sell. But what if the price actually break the support and resistance zone? How do you trade at that particular level in time? You can either use what they call buy stops, or use what they call break and retest. We are coming to that on our detailed video. I don't want us to compress everything on one video to make you or to make us to derail from the main idea. The main idea of this video is to introduce you to support and resistance, to help you to be able to come up with sniper support and resistance, and to know how to better trade better structures when it comes to support and resistance. Because when it comes to support and resistance, we have different structures. We have sideways structures and we have trending structures. All right. So here we would have, since the market was going down and this was a selling market, the trend was actually, would have the only signals we would have been looking for would have been sell signals. So even if the market was here, I'll wait for the market to come back to my support. I'll wait for the market to come back to the support, then I sell. All right. When I say here, the market will come back. I'll be waiting for the market to come back to this line again, and I say. All right. So you see now, for a sideways market, we always buy at the support and sell at the resistance. But now for a trending market, it is the opposite. For a trending market, we instead do what? We instead sell at the support and buy at the resistance. So the rules change when it comes to a trending market. And if it is a market that is going up, if it is a market that is going up, we'll normally have our support here and our resistance here. Obviously, this one again, we'll buy at the support and sell at the resistance. The only one that is different is if the trending market is actually a bearish market. In that situation, we'll sell at the support and buy at the resistance. Because we'll be waiting anytime the market comes around here. For example, this is the current market price. Today is today is the 8th, and this is the current market price. So what I'm just waiting, if the market has to pull back somewhere here tomorrow, then I'll sell somewhere here. I'll sell here and my take profit will be down here. So anytime the market comes down, I'll be waiting for the market to pull back and I sell. Waiting for the market to pull back and I sell. And when the market pull back here, what I'll be using to confirm, the confirmation I'll be waiting for, I'll be waiting to have a candlestick confirmation to enter in the trade. And I already showed you guys, showed you guys different candlestick confirmation and how you can use them to get into trade. And the reasons for this video is because for you to be able to come up with solid signals, you need to be able to know how to combine candlestick patterns and support and resistance. The first thing you need to be able to know how to do is to draw your support and resistance. You need to be able to know how to draw accurate support and resistance. When you've drawn your support and resistance, candlesticks now, you use now all the candlestick patterns which I taught you guys. You use those candlestick patterns to look for confirmation, to look for signals. All right. For example, if this is my support and resistance, and the market is here and is heading towards the resistance, as soon as the market gets here, I'll be looking for any candlestick patterns or any reversal candlestick pattern, because I've taught you guys reversal candlestick patterns. So as soon as the market comes back here, I'll be looking for any reversal candlestick pattern. And look, see what happened. We had this kangaroo tail or this shooting star. A shooting star is a typical candlestick reversal pattern. We would have shown there. So the structure was there. The structure was there to guide us. Then this candlestick was there to give us a confirmation. We had a guide and a confirmation. And the structure for a signal. Remember, for you to be able to have any signal, like I explained on the other video, for you to be able to have any signal in Forex, you need to have what they call a structure. After a structure, you need to have what they call a confirmation of that structure. Then after a confirmation, now you have your signal. All right. So you have structure, confirmation, and signal. Our structure here is support and resistance. Then our confirmation here will be when the market gets to either support and resistance, we'll be looking for a confirmation. And that confirmation is any price action or any candlestick patterns that will support that the market is reversing. If we don't have any candlestick pattern that is supporting that the market is reversing, we won't take that particular trade. All right. So that is our confirmation. Then after we've taken our confirmation, if the market got here and we had a shooting star or there are many reversal candlestick patterns, then what? it will give us a sell signal. So you have structure, confirmation, and signal. Structure, confirmation, and signal. All right. So with that being said, let's see what we have on the next slide. And the next one is a major and minor support and resistance level. This is very important, because you can see here this support line. This first black one is what we call our major support and our major resistance. But inside that major support and major resistance, you have other small levels. You can see the market was still having touches somewhere here. So those ones are called minor support and minor resistance. And if you are not very careful, your idea is going to be cloudy. Your idea is going to be cloudy when you are trading support and resistance, because you'll be taking these same levels as potential support and resistance, of which they are not. So I will show you how to be able to differentiate between minor and major support and resistance, and how you can trade or utilize minor, because the minor support and resistance level are also very important. The first thing we have here is a major and minor support and resistance level are time frame dependent. So now when it comes to using structure and candlestick, a structure and a candlestick patterns to come up with a particular signal, don't get so confused. If you are focusing on one time frame, make sure you generate your signals from that time frame. Don't go to the hour, to the daily time frame. The daily time frame will be showing you that the trend is going up. Then when you come on a 4-hour time frame, you take a minor segment of that particular period. That period might even show you that the market is going down. Then you get confused. Trading with candlestick and a structure is time frame dependent. So if you are doing your analysis, stick to one time frame. Stick to one time frame. Generate your signals from that time frame. Place your stops and your target from that time frame. You can only use a higher time frame to just have an idea, on what is going on the bigger picture, on how the bigger trend is going. But doing your analysis, placing your trade, your stops, and your target is time frame dependent. Focus on one time frame. And the best time frame that I use, like this one, is a 4-hour time frame. With a 4-hour time frame, it even gives you time to do a lot of things. It gives you time to even take that pressure. It takes that pressure away. You can be doing your other things. Once you already set your trade, you set and forget. It's what we call set and forget. So the 4-hour time frame is very nice. If you can either use the 4-hour time frame or the 1-hour time frame. All right. Then when you have time, if you have time on your hands, when you actually want to trade, then you can go down to lower time frames like 1 hour time, 1 minute time frame, 5 minute time frame. The same signals will be the same structure, the same explanation applies for all time frames. But now it depends on the time you have on your hands. All right. So we're talking about major and minor support and resistance level. And a major support and resistance level has no other intermediary support and resistance level. All right. So we're talking about a major. As you can see here, we have major support and major resistance. Inside here, you can see the market left from here, bounced here, came back here. So we couldn't have taken this level. We wouldn't have taken this level as our major resistance because the level was broken. Or we wouldn't have taken this same level as our major support because this same level was broken. But this one, from year to year, the market has been bouncing here. So this was our major support and our major resistance. And how do you use the minors? How do you use the minor support and resistance level? How do you use the minor support and resistance level? And it is very clear. If you already have your major support and your major resistance, you can see, you call this one even minors because you can see they were all broken. This one was broken, this one was broken, they were all broken, but the ones that were respected, throughout is this one and this one. Because even though this one was broken, the market respected this one. And now it says a minor support and resistance level in a higher time frame can be a major support and resistance or a whole trend in a lower time frame. The same thing I was explaining. When you are doing your analysis, don't get confused with different time frames. All right, don't get too confused because this small minor, the minor support and resistance you are seeing here on the 4-hour time frame. If you go to the 1-hour time frame or the 30-minute time frame, this might be a whole trend on itself. This might be a whole trend. It might be a whole trend, or it might be its own. It might be having its own major and major support and resistance. All right, so this small trend you are seeing here, this small level from year to year, if you have to go down to the 1 hour time frame, this might be a major trend on its own, or it might be a major support and resistance on its own. But now we are focusing on the 4 hour time frame. On the 4 hour time frame, since I said it is time frame dependent, it is a major time, it is the minor. It is a minor support and resistance. And how do you use minor support and resistance? They say only use minor support and resistance within a specific time frame to set and manage. Very, very important. To set and manage your positions. To set and manage your position. Let me explain what I'm saying. For example, we have our support here and we have our resistance here. When the market came back here, we bought somewhere here. Let's just assume we bought somewhere here, right? And our target, since we bought somewhere here buy, we have our take profit, we have our take profit somewhere here. Since we have our take profit somewhere here, we already know in our mind that okay, they are in between our buy and our take profit, in between our entry level and our take profit, we have those minors. We have those minor support and resistance in between. So what you have to do is, if the market is heading to the next minor support or the next minor resistance, once the market gets to that particular level, you need to be able to trade your stops. You need to be able to move up, to be able to move your stop loss up. For example, if I buy here and the market, as soon as the market gets to this particular minor support, I'll take because remember your stop loss will be somewhere here. All right, so immediately the market gets here, what I'll do is I'll take my stop loss from year to year. I'll put my stop loss at break even, because I can see there's a potential. The market used to have some constraint around that particular level, and since I know that buyers and sellers, that is a particular area where they used to always be war. I know there used to always be war around this area between buyers and sellers. I don't know who is going to win. I don't know who is going to win at any point in time. So what I do is I have to preserve. I have to preserve my profit. I have to protect my position. So as soon as the market gets to the first minor support and resistance, what I do is I take my stop loss and I put at break even. Once it is at break even, I wait. As soon as the market gets to the next minor support and resistance, what do I do? I take my stop loss from that break even to the next to the previous minor. So my stop loss will move from here now and here. Remember, the price is here, so I'll put my stop loss here and I'll be waiting. So I'll be trailing. As soon as the market gets down to the next level, to the next minor resistance, I'll take my stop loss again from here to here. So you see, the first stop loss was here. When the market got here, I put it here. When the market got here, I put it here. When the market got here, my stop loss now is here. And from here to here, I'm already in with about plus 90 pips. So even if the market has to go against me, it will knock me out somewhere here, and I'll be going out with about plus 90 pips. So what happened? Since the market was here, it went up now and hit my take profit, and all my positions were safe. So even if it went and it didn't hit my take profit, or maybe there was a news or a slippage and it missed my take profit, and the market has to come down. When it comes back, remember my stop loss was already somewhere here. My stop loss was already somewhere here, because I knew that in between there were other minor support and resistance level that I knew the market could have broken or changed structure, because these are levels that the market can change structure at any point in time when there are minor support and resistance. The market might still get somewhere here, since there's a fight between buyers and sellers. The market, you might buy here thinking the price will go up here, but when it gets here, you see, it goes back down. Or you might actually sell here thinking the price will go down, but when it comes back to this minor resistance, you see, the price goes back up. So now, this minor support and resistance will be able to help you to manage your trade. So this is the key. Major support and resistance will help you in trade execution, while minor support and resistance will help you in trade management. All right, that is very, very simple. You should be able to just have that in your mind. Major support and resistance, which is this ones we have here. So major support and resistance like this, major support and resistance will help you for your entries. So major support and resistance will help you for your trade execution, while minor support and resistance will help you for what? for trade management. And I've already explained how you can be able to use minor support and resistance to manage your trade. So with that being said, let's see what we have here. So the next thing we have here is live chart demonstration. So let me just show you a couple of examples on the live chart so that we can be able to call this a video. All right, now on whatsoever we've explained, you can see I've already explained how you can easily trade, you can easily place your stop, you can easily extrapolate your support and resistance. You need to be able to pick points anytime a particular price has, anytime there's a particular repetition of two levels. You can see here we had one level here, one level here, one level. So that is a potential resistance. And here we had one level, that is a potential support. So that is how we came up with our support and resistance. And for you to be able to know if that is an accurate or a sniper. Know when you talk of sniper, a sniper support and resistance, always go back to the line chart. You just click here on the line chart and you see if it respects. If you can see, when I click on the line chart, you can see the same levels. The same levels are respected, all right? And this is the current market price. You can see it's actually piercing through the support and resistance zone. So here, I'll just have to wait. You can see that is the current market price. So here, I'll just have to wait to see if I'll have a confirmation if this market will turn at this particular place so that I can sell at this resistance, or if it actually breaks through this resistance, then I'll wait for a pullback, for it to pull back here and I buy. So those are strategies you can use to trade support and resistance. But don't worry, on the next video coming, I'll be able to teach you how to trade the bounce, the breakout, and the fake outs. All right, the bounce, the breakout, and the fake outs in Forex. Because the bounce, when it bounce, you trade, you need to know how to trade that. The fake outs, there's some that you have what they call fake breakout. That if you are not careful, once you see small break, you think the resistance. So you need to be able to know how to trade fake breaks out and to trade breaks out on their own. And then the next thing I also want us to do, let's go back to the candlestick. Okay. Good, so let's, there's still a couple of charts. I think I have this one. Good, you can see this is an example of the same one I was explaining. The same one I was explaining, because here, let me put it on auto screw. If you don't want your chart to be moving off and down, make sure you put auto screw off. So let me put auto screw off, because here, you can see the first section we have here, this was a sideways market. The first structure we have here was what we call, this one is an entirely, this section, this one which is bouncing from here, this is a sideways. This is a sideways market, all right? That is a sideways market. Now, after the sideways market, there are the same strategies that you'll be using to trade here. For example, if on a sideways market, I know that I'll be able to buy here, sell here, buy here, sell here. All right, but now when it comes down to a trending market, which is now this, you can see here, just keep going. You can see the structure was broken somewhere here. This is the area where the structure was broken. And when the structure was broken somewhere here, it turns from being a sideways market to a trending market. And when it became a trending market, what kind of trend is this? This is a typical downtrend. And when it is a typical downtrend, what signals should you be looking for? You should only be looking for sell signals. So let's just assume the market is here. I'll be waiting for the market to pull back to this line. When the market pull back to this line, I'll sell. I'll sell and I'll be able to put my take profit. See, my take profit will be right down here. But so my stop loss will just be here, stop loss, and my take profit will be right down here. That's a risk to reward of about 1:3 or 1:4. As opposed to if you are trying to trade opposite the trend, if you are trying to trade against the trend, it means when the market comes here and you buy here, your stop loss will be here and your take profit will just be here. So that is a risk to reward of 1:1. So in this situation, you need to have at least 60% accuracy to be able to make money in Forex. But now, if you are trading with a trend, you see that, okay, if the market comes here and I sell here, my take profit will be right down here. And this is a risk to reward of at least 1:3. So in the year, I just need to be right 3 out of 10. or I just need to be right 30% of the time and I'll still be making money because my risk to reward is very, very high. The one time that I win, my one winner that I have will be able to cover all the small losers that I used to have. So that was my explanation. The same strategies you use to trade a trending market are different from the same strategies you use to trade a sideways market, because this is a sideways market, this is a sideways market where the chart is just bouncing like this. Then this is a trending market where you then have a chart bouncing like this. This is a downtrend and this is an uptrend. We call this a down channel and an up channel. All right, so we'll talk more on how to trade channels, how to trade breakout, how to trade fake outs, how to trade the bounce, how to be able to use now a combination of candlesticks and support and resistance, candlesticks and channel on our next video. So with that being said, we've come to the end of this video. And on this video, I don't want us to be able to go out of track. We've been able to cover a couple of things. And what I wanted you guys to pick out from this video is to know how to draw support and resistance accurately. So the exercise I want you guys to do is at least go on your MT4 or go on your MT5 and be able to extrapolate, be able to extract as many support and resistance. This thing only comes with practice, all right? That's why they say practice makes perfect. Try to come out with as many support and resistance level as you can. Try to do as many back testing as you can. You'll be able to, you'll be perplexed, you'll be surprised, that means you'll be confused with the number of support and resistance or the number of sniper entries that you'll be able to see in Forex. And that money only comes in when you are able to know how to figure and be able to extract those sniper support and resistance. There are too many support and resistance in Forex, but if you follow this course from the start to the end, you'll be able to know how to be able to to be able to pick the accurate ones that you can be able to trade. So with that being said, if you have gotten some value from this video, please smash the thumb up, and if you haven't subscribed to the channel, also hit the subscribe button below to subscribe to the channel. And if you are looking for the best Forex broker, because I explain to you guys every day, you might know how to do chart analysis, you might know how to trade Forex, but if you don't have the right tool, there is no way you're not going to be able to make money. All right, so if you want to be able to use the same brokers I use, just check the video description below and you'll be able to see the link of the brokers I use so that you can also use them. And if you want to join a community of Forex traders that share ideas on a daily basis, or you want to get one-on-one with me, also check on the video description below. There's a link for my Telegram channel. That is the only Telegram channel I have. So there's a link for the Telegram channel that you can also join that Telegram channel. So like the video, subscribe to the channel. Until then, I'll see you guys on the next video. Peace.